All right, Sunil Singhania, founder Abacus Asset Management, also joining us now. Sunil, thanks so much for being with us this morning. It's been 10 years of the ET Now team. Share with us really the journey. You've always been part of our 10 years in almost all of our big events, our key moments. Share with us a little how the experience has been for you.
So, heartiest congratulations to the team of ET Now, all my friends at ET Now and all the viewers for 10 glorious years of fabulous coverage as far as the financial markets is concerned. In terms of the last 10 years, obviously they have been revolutionary. The economy has grown quite significantly and a lot of wealth has been made despite all the volatility. My view is that the next 10 years are going to be equally better, or in fact more better. Just to give you a perspective, last 10 years our economy grew from $1 trillion to $2.5 trillion. The next 10 years, this $2.5 trillion can easily be $6 to $7 trillion. So I think a lot of wealth is going to be created, and I'm very sure that ET Now will help its viewers in participating in this huge wealth creation.
10 years back, the Nifty's growth story, it's been strong. Do you think India will outshine over the next 10 years as well? Where do you see the Nifty and Nifty EPS going?
So base effect would come into play if we reach a very large size. But in the last 70 years, we reached $2.5 trillion in economy size. If you look at other countries which have witnessed fast growth over the last 30-40 years, like Japan, Taiwan, Korea, even China, when fast growth starts to happen in an economy, that rapid growth stays for 25-30 years. India has been in that phase only for 10 years. So it is very fair to presume that this era of fast growth of 7-8% should definitely continue for the next 10-15 years. In terms of expectations, I mentioned to you that the GDP should move up from $2.5 trillion to $6 or $7 trillion. Typically, the markets sort of follow the GDP trend. So if the GDP is going to be 2.5 times of where it is today, it is logical to expect that the market should also logically be 2.5 times of what it is today in the next 10 years.
Sunil, hi, good morning. Good to have you join in on ET Now's 10th birthday. But the last 5 years, Sunil, in terms of DIIs, saving have gone up a lot. Do you think the DII fraternity can still be very high in terms of saving over the next decade too?
We are not even touched the tip, I would say, of the iceberg. If you again see the total asset management / wealth management industry in India is $350 billion in an economy size of $2.5 trillion. I mentioned we are going to be a $6 to $7 trillion economy. Our saving rates on the household side are anywhere between 20 to 25%, which means that when we reach $6 trillion of economy size, on an annual basis, we would be saving anywhere between $1.2 to $1.5 trillion. And the cumulative investment in equity mutual funds is only $150 billion. So I would say that we have already reached $1 billion in SIP flows. In the next 3-4 years, this $1 billion can easily be $2 billion in monthly SIP flows. And I would say that the size of the mutual fund industry, which is right now $350 billion, when I say mutual fund, it's asset management companies and wealth management put together, this can easily be $2 to $2.5 trillion over the next 10 years. So it's like a 6, 7, 8 times over the next 10 years.
Right. Sunil, it's been banks and financials which have won in the last 10 years as the best performing sector. But do you think over the next 10 years also, it will be financials which will define the increase to insurance, AMCs as well will be the best sector, largely financials itself which will dominate?
In a growing economy, I think financials will continue to be the largest component of the economy or the GDP. And in India, it would be no different. However, having said that, you did mention that now within financials, we'll have two types of financials. One would be the fund-based financials and the other would be the service-based financials. And a lot of opportunity does exist in the fund-based financials, but maybe an equally or better opportunity exists in non-fund-based financials. So, you have life insurance companies, for example, general insurance companies, you have depositories and exchanges which are listed, you have asset management companies which are listed, you'll have wealth management companies which are listed. And I think a lot of these companies which are non-fund-based they don't need capital to grow. They can, because these are service based. So I would say the ROE profile of some of these subsectors can be much better. Obviously you have to marry the valuations. But I would tend to believe that on the financial side also, the non-fund based financials might have an edge in terms of higher returns over the next 10 years.
Consumption, Sunil, as a sector has always done well, and with new disruptive businesses that are now growing, do you think the next 10 years will be tougher for consumption?
So consumption will continue to be a great theme, because as human beings we will always want to consume more and newer things. So I would say the pattern of consumption might change, but consumption as a theme would continue. The only difference between investing, say, 10-15 years ago and now is that you could bet on companies from a 50-year view. Now, because of this technology and easy access to consumers because of technology, maybe the competition can be much fiercer and much more. So you can't just buy any company or a theme and stick with it for 20-30 years. You have to be alert. You have to just be on your toes at whether disruption can impact the theme or a company. In India, there is huge potential. For example, I always make this point that we consume 1 lakh crores worth of sugar, only sugar, in this country. Food is the biggest spending as far as the country is concerned, and for each individual as an Indian. But there are hardly any food companies which are listed. So maybe that would be a big theme, packaged food. Both husband and wives are working, so the propensity to eat outside food is going to increase. So I think there will be a lot of these sub-themes on the consumption side. So consumption will remain as a big theme. Maybe the product or the company might change.
Sunil, thank you so much for joining us this morning and on our 10-year anniversary. Thanks so much.